about 20% of homeowners have a HELOC or home equity loan. And so there's a lot out there, but the difference between you and your neighbor Bob is that Bob may have used that HELOC to buy himself a new boat or a new sports car, or better yet, a new vacation. Hi, I'm Jonna. I'm a real estate investor, entrepreneur, and mom who built long-term wealth through real estate, all while my husband and I balance full careers and family life. If you're earning a good income, saving for retirement, and doing all the right things, but still feel like your money isn't creating the freedom or security you want, and you want a great life, you're in the right place. Let's get started. Hey friends, welcome back to Idaho Real Estate Investing for Life. I'm Jonna, and let's get into it, shall we? I hope you had a chance to listen to the last couple episodes. We were talking about financing. How are we going to finance these real estate investments that we're going to get started? Today, it's really the third part in a series about financing for real estate investors. And this is a question that came up this last week, and it specifically made me want to do a topic on it because it's important. And that is, the question was, should I use my HELOC to buy an investment property? And if you're not familiar with a HELOC, it's a home equity line of credit. So I'll explain that more in a little bit, but this is a powerful question, and it isn't an answer that's a simple yes or no. And my aim for the end of this episode is you are going to really know when it's smart to use a HELOC and when it's not, whether you have a green light or a red light on really pulling the trigger on this HELOC off of your primary home. And we don't want to put your financial future at risk. We want to be smart with our money. So let's dive in. If you're a high income earner or you are a homeowner that has owned a home since, I would say for the last 6 years or more, if you bought before 2020, chances are, if you haven't over leveraged, you have built up equity in your primary home. It's so exciting, right? And especially here in a high, accelerating market that we've had here in Idaho, or there's many other fast growing markets, you've probably watched your home value climb fast, and now you're sitting on this big kind of nest egg, this equity that's in your property. And for many people, your house is the largest pool of money that you have access to. So it's a big deal. And you may have bigger assets in 401ks and other retirement accounts, but you're going to get penalized if you take those withdrawals. So the question is, really, should I tap into that and to either start my real estate investing journey or scale my real estate investing journey? And I've used it myself, so I can speak to this, and I think there's some real pros and cons with it. A HELOC is basically taking a loan from yourself out of your equity. And so there's some real positives about it, and it can be used in a very smart way, but also can be dangerous if used without a strategy. So let's go through both sides, and you can make a determination what you think. So let's first connect with the smart ways investors really use HELOCs. There's 4 main ways that I see investors using them all the time. The first one is to use it as a down payment on a rental. It's really the most common strategy. Let's say you pull $60,000 to $120,000 from your HELOC and use it on a down payment on a $300,000 to $600,000 property. We talked on previous episodes about how you're going to get the main loan for that property, but we're talking about the down payment here. And you'll just want to be really specific with your lender that that's where the funds came from, and make sure they're taking your HELOC payment in conjunction with your primary mortgage and using all those numbers to make sure you qualify fully and don't have a surprise when it comes to underwriting your investment property. And the second thing that a lot of people use HELOCs for is to fund renovations. And this is huge for BRRRR investors. And if you're not familiar with what BRRRR is, it's just basically buy, renovate, rent, refinance, and repeat. So in other words, you're picking up a rental property, using your home equity loan as your purchase, or at least the down payment, and then you are using more home equity or HELOC money to renovate that home and then rent it for more and then refinance and repeat. And it's something that is very commonly done, and we can go into a whole new episode about that, but a HELOC is often used to fund renovations on a rental. Buying an entire small property in cash. That could be another use for a HELOC. It may not be applicable if your average price point for a single family home is in the 500s, but in some markets you can pull $100,000, $200,000 from your HELOC and buy a small rental outright. You hear about people doing this in the Midwest and parts of the Southeast and certainly even out of country. And it can be really powerful, and usually it's a little bit quicker to close on those homes and less hassle than going through the full outside lender pre-approval process. It's very popular. Number 4, it can be used temporarily like a bridge loan. So it might be a way to strengthen an offer, cover a rehab, or buy a property that you plan to refinance. But the key is you're not planning to borrow that money long term. You're planning to grab it and to pay it back and refinance it, usually to a traditional, like 30-year fixed mortgage, for example. The thing is, all of these are legitimate strategies, and for the right investor, they can be wonderful with the right financial foundation. When is a HELOC a smart move? Even if you're using any of these strategies, it may or may not be a smart move. And so let's go into that. A HELOC can be a fantastic tool when first thing is that you can comfortably absorb the payment without stress. I've talked a lot about not losing sleep at night, and we want our investors to get sleep at night and be able to have that financial peace. So make sure that you can absorb that HELOC. Again, you may have vacancy on that rental property. Can I handle it without financial stress? The second way that it can be a great asset is if you have great credit, because what's going to happen is you're going to get better rates and terms. The third thing that can make it a great asset is knowing that you have 3 to 6 months of emergency savings in the bank. I don't want you to ever put your primary home at risk. I was purchasing homes during the Great Recession, and you know what? Most of those homes were either short sale or foreclosure. And one I even purchased from someone that I personally knew. It was a sad situation, but in all instances, it was a financial shortfall that made it happen. And maybe they had equity in their home at once, but they over leveraged. The market went down, and then they had a change in circumstances. Either they lost their job or they had to move for unforeseen circumstances or reasons, or they lost a loved one. There's a whole number of reasons why you could find yourself upside down quickly and get caught, and we don't want that for you. You want to have 3 to 6 months emergency savings, and you also want to have 3 to 6 months of mortgage and operating expenses put away. And it is so important to make sure that you are accounting for all of that, because inevitably something happens. You hear the old adage, like save for a rainy day. Rainy days happen. So super important. And then the next thing that I'd love to see if you're utilizing a HELOC is that you're buying a strong cash flowing property, because if you can't cover your costs, it can be a scary thing too. So the rental ideally will cover the HELOC interest plus the rental expenses with buffer to spare. And I know cash flow has not been, the last couple of years, it hasn't been what a lot of us have strived for, but there are properties where it will cover your costs. And lastly, you need to have a plan to pay the HELOC back. And I don't personally think it makes sense to pay interest only and extend it out for years and years and years. You really need to have a real plan, not an eventually, or it'd be nice to do that, but have a plan. It's like your business plan. I heard someone say that rental properties are like a business in a box. So this is part of your business strategy and your cash flow strategy to whether that business makes sense. You don't want to go in and buy a business that is losing, bleeding money right and left and take out way too much leverage for it. You want to buy a property that's solid and is going to continue to grow, and have a plan to pay that HELOC back and get yourself right-sided in your home. And this is really where high income earners really shine. You already have strong incomes, and the HELOC can accelerate your investing timeline. And in that way, it can be used as a very smart tool. Now I'm going to cover a few things that address when a HELOC is not a good idea. And let me speak clearly here, because this is truly where people can get into trouble. If you don't have cash reserves, it's not smart to grab your HELOC because it's not your emergency fund. And I've seen that happen, grabbing that HELOC for an emergency when really it should be used for leverage to further your investment portfolio, or at the very least to renovate your own home to increase the value of it. I wouldn't consider a HELOC if your budget is really tight. Your home's on the line. You need margin. And who needs that kind of stress? I would rather hold off on buying a rental property if it meant sacrificing my peace of mind and potentially sacrificing my home. And a HELOC should feel like a strategic move, not a desperate one. So if you don't fully understand rental analysis and you don't understand your personal budget, your numbers, please hold off on getting one until you do. And there's a lot of resources that I'd be happy to share with you to get you to that point. But we want to make sure that it's a strategic move and not just a random or desperate move. And you really should be fluent in a few basic things about your rental to move forward. You should be fluent in your net operating income, cash flow, vacancy, your CapEx, and dealing with tenants before borrowing against your home. We have a lot of that information available, and that's part of what I mentor other investors on. So there's plenty of resources for that, but don't go into this blindly. And then the last thing, as far as the risk that you need to consider, I really want you to go out into this with clear eyes, and there's 3 major risks. The first one is when you have a HELOC rate that's variable, and most are variable. So if the Fed raises rates, your payment goes up. And on a large balance, that increase can be hundreds of dollars per month. Number 2, you need to understand that your home is the collateral. If something goes wrong financially, this has real consequences. And then you don't want to over leverage. So remember, there's power in the journey and in waiting. And I just say this because I see people just get really antsy to generate huge buckets of cash flow and equity in a very short amount of time. And progress and momentum is great, but you don't want to over leverage. And you need to just remember that a solid rental portfolio takes decades and not debt stacking on day one. You want to be smart. You don't want to be frantic. And I see this happen too. And I just want to encourage you. It's amazing how much wealth that somebody can accumulate in the matter of 10 years. And it always takes longer than you think. But then you look back after 10 years and you're like, oh my gosh, I was consistent. I did one thing after the other. I put one foot in front of the other, and it makes a difference. Things, all of a sudden you look back and you're like, oh my gosh, I created momentum and that happens. So trust me on this one. You can still go slower and steady, and you're still gonna win the race. So I looked up a few national stats that might be interesting to you. The first one is that about 20% of homeowners have a HELOC or home equity loan. And so there's a lot out there, but the difference between you and your neighbor Bob is that Bob may have used that HELOC to buy himself a new boat or a new sports car, or better yet, a new vacation. And those things are fun and great, but those things are not going to help Bob grow financially. You're going to be smart with that HELOC, and you're going to use it to tap into increasing your investment portfolio, which is going to grow your wealth, of course. And get this, U.S. homeowners have over $16 trillion in tappable equity. So there's a lot of availability out there. And just use these things as your general guardrails. And last, I'm going to tell you about how lenders think about HELOCs. And I don't want to speak for a lender because I'm not one, but here's some general terms that I know of from my experience. To qualify for the best HELOC terms, lenders are looking for 720 or more credit score, of course, strong income, good debt to income ratio, sufficient equity in your home, and clean credit history. And if you're listening and you fit that profile, you're probably in a great position. Go ahead and talk to your local lender or credit union, or even who you have your current mortgage with, and find those things out. It can be such a great tool when used correctly. And the key is to do this safely. And so as we wrap up here, I'm going to give you 5 rules that I recommend to every new investor. The first one is keep your emergency reserves fully funded, especially when you're going through that pre-qual process for getting your HELOC. Number 2, keep your rental reserves for every rental you own. If you have 10 rentals, you don't want to just isolate and just think about that one you're getting the HELOC on. You got to look at your overall criteria and make sure that you're covered there. Rule 3, don't buy a deal that only works if everything goes right. Because yes, we want everything to go right, but there's always going to be something that has a little bit of a hiccup. Number 4 is decide your HELOC repayment plan before you borrow. Will it come from cash flow? Will it come from income? Will it come from a refinance? Will it come from a bonus you're guaranteed? I don't know what it is, but just know your repayment plan for that HELOC. And number 5, know your numbers and don't fudge them. As I always say, real estate isn't magic, it's math. And also, I say that real estate isn't easy, but it can be simple. And knowing the numbers is part of simplifying the process. And as I wrap up here, I just want to say, if you're someone who has strong income, built up equity, the desire to invest, and doesn't have a lot of liquid cash sitting around, a home equity line or a HELOC can be a great vehicle for you. It's a bridge that gets you into your first or next investment property faster. Guys, I hope this has been helpful. If you have any questions about a HELOC, go ahead and reach out to me. I'm happy to share any other additional information, get you lined up with a great lender. That is always my pleasure to take you to the next level and make sure that you have fully understood this process. And that'll be a wrap for today's episode. These HELOCs are a great thing to look into. I encourage you to listen to this episode again, maybe take some notes, grab the show notes, and we will see you on the next episode. Have a great day. Go and grow. See you soon.